Episode 2 of Season 1. Reading a General Ledger Extract. Excel and Power BI for Finance. 22,000 rows of journal lines. No formulas yet, just literacy. Because half the battle in finance is being able to read what your ERP just spat at you. Today, 3 things. What every column in a general ledger extract means, why the unit of meaning is the journal entry, not the row, and how to look at any line and tell a coherent story about what happened in the business. Before any formula, learn to read the file. You open the Excel file your ERP just produced. 22,000 rows. Each with a date, a 4-digit account number, 2 columns of dollar amounts side by side, a terse description, and a reference like sales order 01284. Where do you start? Most Excel for Finance tutorials skip this question. They jump straight into SUMIFS and pivot tables, assuming you already know what you're looking at. We won't. The half step that separates a junior analyst from someone who knows what they're doing is reading the file. Every row in the Atlas Parts General Ledger has the same shape, 9 columns in order. Journal ID, line ID, posting date, account number, debit, credit, description, source document, and cost center. 2 things to notice. First, on any single row, exactly one of debit or credit is 0. The amount goes on one side or the other, never both. Second, the rows are flat. No nested structure, no parent-child relationship. Every row is independent. That flatness is what makes the file simultaneously approachable and overwhelming. Here's the rule that explains everything. Every journal entry's debits and credits sum to 0. Not just the file as a whole, though that's also true, every individual journal entry. If you filter the file to a single journal ID and add up the 2 columns, the totals will match exactly. This is double entry bookkeeping, the same idea Italian merchants invented in the 15th century. Every business event has 2 sides, and the general ledger records both. When you read a general ledger, the unit of meaning is not the row, it's the journal entry, the group of rows that share an ID. A single row by itself is half a sentence. Let's read a real journal entry. The first one in fiscal 2025 is the opening balance sheet for Atlas Parts, posted on January 1st. About 24 rows in a single entry. Cash, $850,000 debit. Accounts receivable, $1.25 million debit. Inventory across 6 categories, also debits. On the credit side, accounts payable at $685,000, long-term debt, common stock at $1 million from shareholder investment, and retained earnings as the balancing figure. Sum the debits and the credits. They match exactly, they have to, by the rules of double entry. Now a sale. From the middle of the year. Journal entry 125, posted in November. Customer 007 placed sales order 01284, $18,420 of engine and suspension parts. 3 rows. Accounts receivable debited $18,420. Sales engine credited $11,200. Sales suspension credited $7,220. The totals balance. But there's a second journal entry posted at the same time, recording the cost side. Cost of goods sold debited $7,460. Inventory credited the same. 2 journal entries for 1 shipment. Always read them as a pair. Every account has a 4-digit code, and they are not random. First digit 1 means assets, cash, receivables, inventory. First digit 2 means liabilities, accounts payable, accrued wages, long-term debt. First digit 3 means equity, common stock, retained earnings. 4 is revenue, 5 is cost of goods sold, 6 and 7 are operating expenses, and 8 and 9 cover interest and taxes. Every ERP implements the digits slightly differently. Some companies use 5 or 6 instead of 4, but the shape is the same anywhere in the world. If every journal entry balances, the whole file balances. Total debits across all 22,000 rows equals total credits to the cent. This is the trial balance, the most basic sanity check in accounting. If a general ledger extract doesn't trial balance, stop. Do not proceed with analysis. Either the export is incomplete, the file is corrupt, or someone tampered with it. The source stock column is the breadcrumb back. Sales order numbers point at sales orders. Invoice numbers point at vendor invoices. Recurring tags mark monthly entries like payroll, rent, and depreciation. Once you know the patterns, you can scan 1,000 rows of general ledger and tell which are sales, which are vendor payments, and which are monthly accruals. And when the CFO asks what a particular row means, the answer is always in the source document. No source doc, no audit defense. Three takeaways from Episode 2. First, every row has the same 9-column shape, and the unit of meaning is the journal entry, not the row. Second, every entry balances. Debits equal credits, always. Third, source documents are how the general ledger connects back to the business. Without them, you can't audit defend a single number. That wraps Episode 2. Next up, lookups for finance. SUMIFS XLOOKUP and index match. We finally write a formula that joins the general ledger to the chart of accounts and produces a 1-page profit and loss by category. If you'd like to follow along, the Atlas Parts dataset is linked in the description.